Okay, going to give an explanation of my chart and how I execute trades. So, to begin with, to look for longs, we really want to be looking for price that has come down through this cloud here, which is a mean regression cloud. And those are going to end up being your really high quality trades. Those are going to be your runners, um, the bigger trades that you're looking for. And to enter one of those with my indicators using my Renko at box size 5 on NASDAQ futures, what I'm going to be looking for is price to bust down through the bottom cloud, which is conveniently colored green. And I'm going to wait for price to come back up through my trend line here, right? And I'm going to look for the Heiken Ashi, however you want to pronounce it, candles to turn green. All right. I'm going to start looking for these candles to turn green, which is being powered by another indicator. And when I am convinced that price is pushing, or with my trend meter here, everything turns green all at once and everything up there, you can get in. For the beginner novice trader, I would just wait for everything to line up and then that would be your entry point. But myself, I'm a little riskier, so I'm going to get in on the first um, green dot, and I'm going to put my stop loss at the first candle that was purple there, right? And I'm going to hold this trade until I have a reason to close. It's not going to be based on emotions. It's not going to be based on what I think. It's going to be based on whether a candle closes, right? This one underneath this line here, or um, I see um, price slamming through this high Ikanashi. Now, this is for your long-term intraday trade. This was 823 ticks. This was a huge, massive trade. Yada yada. But this is cherry picking, right? So we're gonna go into what if I want to take this trade here, but we're not below the cloud. Well, if you look at where price started from, we're coming up into an uptrend, and it came from the cloud right here. So it's fine to take it, and I'll show you an example for these two where you could take these in a second. So this is going to be the same concept. We get a green candle that's busted through the trend line, and the Heiken Ashy candles have started to turn green here, and I'm getting on my trend meter green, 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 right? So there's you an entry um, right here, and same concept. Price closes below um, this RMI trend. So, but what if we want to scalp these little guys here? I don't have an issue with that. I like scalping. So if you're gonna go into like a scalping mode, the best thing to do is wait for price to come up through, bounce up, and then get a retest right here, right? So in order to do that on this, you would get in on the candle so that turned green, retested there, boom. Stop loss wherever you're going to put it if you even have one for scalping. And then you're going to be looking for a plateau of this line here, right? Either up into this kind of oversold or top area. And but once you see this peak and start to come down, that is your exit. So I will put that right there, and we get a peak coming down. So we're going to close right there. That's a 60 tick win. I'll show you real quick on regular candles what it looks like. Put that there just so we can find it. And then let's look. Look back. Where did that line go? Okay, here's your line. There we are. So we got in right here, and we started to peak right there and came down on the hike on the Ranker candles. That's what it looked like. If you want to, you can actually wait till this green line here comes out of this red block, so you can get a little bit more out of it. not much, but right there would be the end up being the close on that candle right there. So you get 107 ticks. So that's how you can scalp using this method. Um, I'm cool with scalping, but like, I don't. It's just too much stress for me now. I look for stuff like this and just let it run. Here's another example. It comes up, busts through, and lets it run. This is my overall um, trend right here. This is what I'm using for that, and it kind of acts like major supply and demand zones. If you look, it shoves down and then comes back through. We find our pivot, comes back up, and gets back into it. And then guess what it does? What supply and demand does? It goes up. It clears out that cycle and creates a new high or a higher high, and then it crashes again. See that? So you can use these as um, supply and demand, or you can only short when it's red and only long when it's green. There's nothing wrong with that. Um, I suggest newer traders do that, but the concept of getting into the longs is very simple. And here it is, another one. We're in the cloud, comes through, turns green, everything's green. We're in, and we close up here when it crosses down, or I see some kind of like wild movement pushing down through the Heikin. Not this right here. This is closing above it, so I'm not really worried about it. And to get into your shorts, shorts are a little bit different because shorts typically have a um a decent pullback. So we're looking for um, to enter on the pullbacks, not necessarily when it crosses through, turns red and everything here. I wait until everything is red. I've got a pullback, I've got a wick, and we're going down. So this is the ideal entry right here. Is after this candle here, we're going to put our stop loss above the trend, and then we're going to do the same thing when price closes above the trend line. This would actually probably scare me a little bit, but if you look at it, really didn't close above it. This dropped. It's just a pullback. I'd probably stay in it. This is what your exit looks like here, and then you have a reentry here again. Um, but here's your pullback here. So it's really up to you whether you want to risk getting in initially on the first sign of of, of shorting of the entrance, but I typically wait for pullbacks on shorting. See, like this dropped. Here's this. Here, this would be the pullback. So you could enter on the red here, and then here you go. See, we dropped down. We had a wild pullback, a couple of them, and then finally it came down. So shorting is just a little different. Shorting is a little harder than going long. Simply just because um, you got to buy. They need to constantly have positions to short with. So they short, they buy, they short. Buying is buying. It's just we're buying. They're not looking to take profits yet. So it's just gonna that's why buying typically just is easier to trade and to retest and goes up again on you know old resistance levels and this and that. Shorting is a little different. They're looking for there's more liquidity grabs. They're taking out previous highs to get those orders so they can continue shorting. Um, but that is the mode of entry. If you do use the red um, to only short and the green to only long, you're more than likely going to have more success, especially if you're only going off of the clouds, because those are basically your deep premium or discount zones if you're an SMC trader. But that is my mode of entry, and that's how I'm getting into trades, and that's how I'm closing trades. So it's based off of coming back down through the RMI trend, or we're plateauing and coming down through the block. When I see this, but I don't see it coming down through the trend, I don't care unless I'm scalping. So that's how I do it.